All right, let's get into it. Today, we're grabbing our magnifying glasses and launching a full-on investigation into one of the biggest stocks out there, Meta. It's been making some wild moves, and we're going to follow the clues to figure out what is really going on. And it all starts with the one question every single trader is asking right now.
And yeah, this is it. This is the big one. With the price taking a nosedive, you have to wonder, is this that golden opportunity to buy the dip, or is this a classic value trap just waiting to snap shut on you? Let's sift through the evidence, and we'll start with what just happened.
So, our first piece of evidence, a single-day drop of over 2.5%. Look, this isn't just some minor wobble. It's a real, significant move. It tells you there's some serious pressure on this stock, and that's exactly why we need to dig in now.
Okay, for our first clue, we're going to do what every good detective does. We follow the money. Looking at trading volume, who's buying, who's selling, and how much tells you a ton about where the big institutional players think this is headed. Are they secretly buying, or are they quietly sneaking out the back door?
And right away, the plot thickens. We've got conflicting evidence, a real mystery on our hands. On one side, you have an indicator called on-balance volume, and it's kind of suggesting that over the long haul, shares have been quietly getting bought up. But then you look at another tool, the accumulation/distribution oscillator, and it's flashing red alert. It shows that very recently there's been some heavy selling. It's like having two witnesses telling you completely different stories.
And here's what adds to the drama. The trading volume itself has been more than 4 times the daily average. Let me be clear, this is not just some quiet background noise. Whatever's happening here is happening with some serious conviction. Big money is making big moves, and that's a signal you just can't ignore.
All right, let's move on to our second clue. We're going to chart the stock's path by looking at its trend lines. You can think of this like we're reviewing the security footage. We're seeing exactly where the stock has been so we can get a better idea of where it might be headed next. And wow, this table really paints a picture, doesn't it? All the key short-term moving averages, the 5-day, the 10-day, they're all sitting above the current price. In plain English, that means the stock is sliced right through its recent price floors. It's a textbook confirmation that the bears, the sellers, are in the driver's seat right now. The downward momentum is for real. Now, to get an even sharper view in this trend, we can use a cool tool called linear regression. Don't worry, the name sounds more complicated than it is. All it does is draw a best fit line right through the price data, which helps us see the dominant trend with way more clarity. So, what does this tell us? Well, the evidence is pretty damning. The slope of that trend line is pointing steeply down, and that R-squared value, it just confirms that, yep, this trend is legit. But here's the kicker. The current price is a massive 9.36% below that main trend line. This isn't just a small dip anymore. It's a major break, confirming a solid downtrend.
Okay, for our final round of clues, it's time to break out the heavy machinery. We're talking about the experts toolkit, the advanced technical indicators that analysts use to get a deep read on a stock's momentum and maybe its potential turning points.
First up, we've got the RSI, the Relative Strength Index. Honestly, the best way to think about this is like a hype meter for a stock. It's basically a scale from 0 to 100 that tells you if a stock has been bought up way too fast, we call that overbought, or if it's been sold off way too hard, making it oversold. It's a fantastic tool for spotting when things have gone too far in one direction.
And would you look at that? Meta's RSI is sitting at 27.05. Now, anything below 30 is pretty much the definition of oversold. So while this absolutely confirms the intense selling we've seen, it also introduces a really interesting twist. An oversold stock is often like a rubber band that's been stretched to its limit. It could be primed for a snapback rally.
Next up in the toolkit is the MACD. This one is a classic. It's a momentum indicator that's all about confirming the strength and direction of a trend. It looks at the relationship between two different moving averages, which makes it a real go-to for traders who want to ride a trend.
And the MACD, well, its evidence is pretty cut and dried. All of its readings are deep in negative territory. This thing is screaming bearish momentum. So unlike the RSI, which gave us a little hint of a possible reversal, the MACD is telling us, nope, this downtrend is in full effect.
So, let's recap. Our investigation has turned up some really interesting stuff. We have clear selling pressure and a confirmed downtrend, but we also have a stock that looks stretched to the downside or oversold. So it's time to put all the clues together and deliver our final verdict.
When we look ahead, these are the battle lines drawn in the sand. That 637.65 level is the critical floor, the support.
If buyers are going to show up, that's likely the spot. On the flip side, 666.97 is the ceiling, the resistance, that the stock would have to fight its way through. These are the numbers that are going to write the next chapter of this story.
So based on all the evidence, I can see three possible futures playing out. First, you've got the bullish rebound, where that oversold condition finally kicks in and we get a nice bounce off that support level. Second, the bearish breakdown, where the downward momentum is just too much and the price crashes right through that floor. And third, you have the neutral stalemate, where the stock just chops around for a while as buyers and sellers duke it out.
And you know, this one quote from the source analysis really just hits the nail on the head. It perfectly sums up our entire investigation. The big picture, the dominant trend, is absolutely down, no question. But the move down has been so aggressive that a short-term bounce is a very, very real possibility.
Which leaves us with the million-dollar question, right? We've laid out all the evidence, the trend is down, the momentum is bearish, but the stock is stretched to its breaking point. So what's next? Does it snap back in a powerful bounce, or does it finally break under all that pressure? The lines are drawn. Now we watch.